Good morning, traders. Welcome back. It is the second week of February. Today's Monday, February the 6th, 2023. Let's get into a weekly preview of what we're seeing in the markets this week. All right, let's jump right into it. Again, it is Monday, February the 6th. We're into our second week of trading here in this month. We had a really strong week last week. Let's see if we can continue it this week. It's been an interesting week in terms of technical analyses, and so let's get into it and talk about a couple of the points that we started to talk about last week, but are really manifesting themselves a little bit more. Really starting about last Thursday or so. Now we look at, again, about 12 technical indicators with a dual overlay of moving averages all the way from 5 out to 200 days, both simple and exponential. We create pivot points and resistance and support levels off of those. All of those things are something that we look at on a more intraday basis, on a daily basis. But for this analysis, we pull back a little bit. We look at a weekly period of time instead of a daily period of time. It's not really that much different. We still have a strong buy rating kicking in, both on the daily technicals and on the weekly technicals. However, you can see that we're starting to get a lot more neutral ratings and overbought ratings. There's actually a sell rating coming in on the MACD, which is a little bit interesting that the MACD is leading stochastics right now. That does happen from time to time. But again, the Williams is showing overbought. ATR is bringing volatility down. We're going to look at open interest and all of that good stuff here in just a second. But you can see that we're sort of starting to run out of gas here just a little bit. Even though we are, again, up above the 200-day moving average, the 50-day moving average, and the 20-day moving average. Everything is still very bullish from a technical standpoint, but it does tend to look like we're running out of gas here just a little bit. Now, if we look at our overall chart, again, you can see VWAP, point of control. We're up above both of those, what we call the moat, the mother of all trend lines, which is this green line right here. You can see that you were up above that. This red line right here, that's your 200-day moving average. We're up above that. So again, you can see that everything really has been fairly bullish going back to the start of this year. We kicked it off with a bullish move this year, and that's really been the impetus this whole entire year, is starting off above what I call the cliff down here and just pushing higher, higher, higher. Now, you can see that that started to alter just a little bit here on Thursday of last week. You can also see that most of our indicators here, while they're not necessarily flashing sell signals right now, they are hooking and rolling over. And I would imagine if we could get a down day today on Monday, as I speak right now, about 2 hours before the cash open, we're down about 25 points on the E-mini futures. I would imagine if we could get a substantive down day today, and again, I'm talking maybe 15 to 45 points to the downside, we might be able to start turning some of these indicators from slightly bullish to neutral to maybe even some sell signals here. They're looking very, very close on getting ready to hook and pull over. Now, if we pull in a little bit closer on what we analyze and stare at all day long as we're trading, which is the 2-day chart, you can see again that sort of peak that we hit there. That was Thursday of last week, and really we have just been trending down. Hasn't been a big trend, but it has been back down again, which again has been a pretty darn big reversal from where we started the year out here, which has just been pretty much up, up, up. The question today, obviously, is I think, can we break some of these levels? And I'll give you my levels here for today. If you are bearish, if you're looking for the downside here, right now, as I speak again, we're down about 26 points at 41.21. 4100 obviously is a big level as we come back down, and then 40.81, 40.66, 40.50 would be the next level down, 40.32, 40.12, and then the big one is just above 4,000 right there, that 4,002 level. And you break down below this area right in here, and that really could put the bears back into play. From an upside standpoint, from a bullish standpoint, if you're looking at levels for today, first one for me would be 41.47. So again, we're sitting right now at 41.23, and about 25 points. So 41.47 would be the first level. Then 41.71, just above that, and then 41.85, and then 42.08. And that's the big one right there as well. That's the high from this past Thursday. So that would be the big number right there. If we could get back above 4,200, clear 42.08, the high from Thursday, it might be substantive for the bulls. If we look at a composite of all of the major indices that we do trade, you can see the SPY, the Qs, the IWM, the DIAs. A couple of big, I think, takeaways here. Again, you can see that all of the major indices that we trade are still above the 200-day moving average. That's pretty big. In terms of support, resistance lines, delineation points, the 200-day moving average is probably one of the biggest lines in the sand that you can draw technically. We're still up above all of those. The mother of all trend lines, we're still up above that. But you can see some pretty substantive diversions here between these major indices. And again, it's another just opportunity for me to point out, I think, how important it is to have a broadly diversified trading strategy. We trade indices, and I think most people understand the power and the benefits of potentially trading an index, which is a basket of underlyings versus just one individual sort of needle in the haystack kind of approach. But we also go beyond that, and we trade all of our major indices. We have every single week, we have a SPY trade going simultaneously with a Q trade. We have an IWM trade. We have a DIA trade. And we don't just trade all four of these indices, but we trade them with different strategies. And you can see how powerful that has been as you do see some divergences here inside of the indices. This past week, for example, we were able to book a pretty nice, pretty early profit on our SPY. And you can see the power of what the tech stocks did with the Qs. We had to work our Q trade. We had to roll that. It looks like it should expire even with even greater profit today because we did roll it at a credit. But big divergence between those two indices. We just barely squeaked out with a profit on our IWM. And then our DIAs we didn't have to touch. So it was, again, another good example of why you should have a diversified approach. Don't ever just trade one strategy on one underlying. It just doesn't make sense from a trader's perspective. We look at the year-to-date index performance, and boy, you can see that the market has just had a crazy good January of this year. We're starting to roll over a little now and come back down. But, you know, again, one of the things that we try to look at is reversion to the mean and how probable or likely something like that is. Yeah, I would say it's pretty probable right now. I think if you annualize this out, no, I don't think that the NASDAQ's going to be up 200%. at the end of this year. No, I probably don't want to make a bet that the S&P is going to be up 100% at the end of the year. I think that this is a little bit of a overstretch, if you will, to the upside, and we will get a little bit of that reversion coming back in. But it certainly has been a strong start to the year. We look at the past week's sector rotation, and what you really see is the standout here is energy. This has been largely affected by nat gas, but oil itself as well has been hit with this, as we've seen probably some supply numbers come in that were a little bit bigger than what we've expected. And in spite of the crazy cold snap that we're having here in Utah and many parts of the U.S., it's really been a below average winter for a lot of the world. That's combined to really push energy prices quite low. We've got a couple of energy trades going on right now. Again, working that reversion to the mean approach. And we feel like we might be able to have some nice cash flow potential off of those. But that's a big area for us right now that we're focusing on with our trading. We look at the week over week heat map. This is 2 weeks ago right here, and this is last week. You can see again that just a few more red areas starting to come into play here. Again, you can see energy was probably the weakest area, while techs were still really strong last week. But it is interesting as we start to look at this again, another sort of push I'll give here to have a diversified, multi-layered, multi-strategic approach to trading, meaning you're not just trading one strategy, you're not just trading one underlying. You're mixing that up. And again, this is what you've seen 2 weeks ago, just absolutely just a ripping week for the NASDAQ. And then this past week, the NASDAQ, the tech stocks just continued to push like crazy. I mean, you're talking about almost 8% return or 8% push to the upside in a couple of weeks. Again, I don't really believe that's sustainable, but I think that the part that was interesting for us as traders last week, because we do trade a sequential ladder strategy on the DIA, it basically didn't move. It just basically just sat there. So that's been great for our trade. And again, it's nice to have a diversified approach. We look at the put call ratio, and that is a gauge to market sentiment. And it is interesting. Last week, we had put call ratios that were below 1. And that was a little bit of a bearish indicator. That continues this week across the board, whether it's the MX, the NYSE, the NASDAQ, or the CBOE in general. We are below that 1 level. And it does continue to look like we're starting to roll over here and get a little bit more bearish tint into the marketplace. Beyond the put-call ratio, the expected move has come down this week, as we would expect it to after a FOMC week. But boy, it's just, again, it's not what we've hoped for. It's not what we have become spoiled with and accustomed to, which was 110 to 140 point expected weekly moves. We may get back there, but this is something, of course, that we monitor very, very closely, because our overnight Theta Ferry trade, a couple of other trades that we do on a day in, day out basis are zero DTE trades. All of the premium and thus the strike prices that we can choose and pick from, they're largely determined by this expected move. So again, we would love to have that number higher, but we work with what we have. So a little bit less this week than what we looked at last week. Now, again, we've talked about this idea that, maybe some of this bull push that we've had through January starting to sort of run out of gas a little bit. Sentiment might be changing a little bit. Well, we do look at the fear greed sentiment reading, takes into account a bunch of different things that factor in on whether the market is overvalued and undervalued or undervalued. It is a contrarian indicator. Just simply means that, when blood's running in the streets, you want to be buying with both hands. And when everybody's getting rich and nothing is going down and everything is going up and anything you can touch makes you money, you probably want to be running for the exits. Well, we are approaching that running for the exits segment of this index. We are now into the extreme greed area. We pushed from 1 week ago at 67 into the greed area all the way up to 76. This indicator has been pretty darn reliable over the longer periods of time. Doesn't mean that today specifically the market is going to retrace, turn around, and come back down. And instead of bullish trends, now we're into bearish trends. But it does mean that this is probably the time to start lightening up on your portfolio, lightening up on your long positions, and starting to look for some short positions. I'm going to have a pretty, I think, good conversation today in our live trading room about a basket of short positions that I'm going to be looking at putting on in one of my accounts today. Just basically off of something like this, the contrarian indicator. So again, sort of looks like we're starting to get to that point where we're starting to run out of a little bit of gas here in this bull push. We look at the open interest areas again on the SPX, and it continues to be that 4,000 level is just this huge demarcation point just above 4,100. It is a big level as well, and then we start pushing down to around the 3,950 level. But the 4,000 level on the S&P, that's a big level. So that's where all the open interest is sitting right now. It's almost all put options, which means it's more slanted towards that bearish approach. We look at S&P volume, and again, it would be nice if the volume could continue to ramp here. We're starting to get a little bit more volume into the picture here. That can help, obviously, help with liquidity. Can also help with expected moves, though, as well. And that helps us with premium. Some of the key news items for us this week. Not a huge week for news catalysts this week, and that's unfortunate for us with our scalping efforts on Tuesdays and Thursdays. But we thought last Thursday was going to be an amazing scalping day, and it really turned out to be a big nothing burger. So you just never know. But we do have international trade numbers coming out tomorrow on Tuesday, and Chairman Powell will be speaking, as well as one or two other Fed members that could be potentially market moving. We have oil inventory numbers out on Wednesday. That's important for us because we usually put our new oil ladder into our oil strategy usually on Thursday. Sometimes it varies on days, but usually we wait for oil inventory numbers to come out on Wednesdays. We place our trade on Thursdays. Thursdays, we have jobless claims and nat gas numbers coming out. We do have a nat gas trade working right now. So that'll be something that we're looking for. And then University of Michigan sentiment readings on Friday. That can be a market mover from time to time. So again, sort of a light week news-wise. But there could be some catalysts in there that drive our performance or our strategies for the week. Some of the updated performance results from last week, year to date here for 2023. On our 0 DTE trades, we have now had 25 days of trading opportunities that we've taken. On those 25 days, we've taken 32 total 0 DTE trades. We don't double up and we don't get two 0 DTE opportunities every day, but we certainly do get them from time to time. And so far this year, we've had 24 winners and about 2 losers. So we're clocking in about right where we ended up the entire year last year percentage-wise. It's been an okay start to the year for us this year. Not a lot of huge winners, and one of those losers was sort of a decent sized loser. I would say it was probably 45% loser or so. So it's an okay start to the year. Obviously, we're still new in the year, but we continue to work that. We look at our other trades that we do inside of the trading room. There's a couple of them in here. First of all, the 4-day to expiration trades. Let's back this out just a second. The 4-day to expiration trades. These have been good for us this year. We've had 11 wins and 1 loss. We do have a Q trade that we rolled from last week to today at a really nice credit. That looks right now very, very favorable for us to expire, fully profitable for us today. That remains to be seen, but it looks really good right now. So 4DTE trades doing well. Our IWM 4-day expiration strangles, we've had 5 trading opportunities. We do it once a week, but we've done 8 total trades. Been a couple of weeks there that we've been able to double dip, and then last week we threw an adjustment on it as it started to get close. Knock on wood, all 8 of our trades so far this year have been winners, no losers. This is one of our strategies. We had a couple last year, but this is one of our strategies that we traded every single week last year and never had a losing trade. So very solid trade. We call it the millionaire maker for a reason. Our pairs trades, all 3 of our pairs trades that we put on a couple weeks ago have now been booked and locked in. All 3 of them have been winners. This is another strategy that we employed last year that not only were they nice, solid trades from an ROI perspective, but every single solidary one of them that we made last year was a winner also. So off to a good year start with the IWM and the pairs trades. Bear market trades, we've had 4 of those, and we still have 1 of them that is open and working. But so far, they've all been winners. We haven't booked a single loss there. Our equity 4DTE strangles, we're using Netflix right now. We are waiting very patiently for PayPal to get through its earnings cycle here. And we might be able to double dip on these and get back to PayPal. PayPal is the equity strangle trade that we'd used almost exclusively last year. This year we're using Netflix. We might be able to double up on those, but so far we've done 6 of those, and all 6 of them have been winners, and they're really, really good ROI trades. The rate of return on those trades is very, very impressive. Our positive DIA trades, we've done 5 of those so far this year, 5 of those ladders, and all 5 have been winners as well. We look at our scalping results from last week. Tuesday was phenomenal. We have a goal of making $500 to $1,000 a day in our trading, in our scalping room on Tuesdays and Thursdays. We hit that goal within a few hours on Tuesday. And so as great as Tuesday was, that's about how bad Thursday was. Just really, really small candles on Thursday. A lot of movement at the end of the day. You look at the chart, there was a lot of movement, but just not enough to scalp. And so I quit very, very early in the day, probably wisely. I don't think it was that great of a day to be scalping. Our dragonflies and double diagonals, zebras, those types of trades, we've done 2 so far this year, and every one of those has worked out okay. We are still in one right now with BA, Boeing, but that expires this week, and it looks pretty solid right now. Our Theta Fairy trades, we've had 23 of those that we've already done this year. Man, they're piling up. 23 of them, total trades, 22 have been winners. 1's been a loser. That's just been a solid trade for us. It's one of the favorite trades of our trading room. The idea that you can wake up, have a really, really, really good possibility of waking up every day with $100 under your pillow before we even start the day. It's a nice trade. Our gold ladder has been fantastic. Again, we've done 5 total trades this year. Gold has been pushing upwards this year, so we've had to chase that trade up on the profit risk-reward ratio and the graph and all of that stuff. But we've been able to do it fairly effectively, and it's worked out quite well for us. And we're starting to build some nice return potential in that trade. where we didn't have that before. It was working for us. We were making money, but it was below average on its ROI. Right now, it's looking above average as we start to get a little retracement in gold. Overnight vampire trade, that was a big winner for us. We'll have another one coming up here in a little bit, and we get one of those every single month as we get the AM expiration on our options. Our oil ladder trade, oil has just been fantastic for us. We've had 5 trades there, 5 winners, no losers. We've added a couple new strategies to the trading room in the last few weeks. One is an in-the-money cover trade, and these are, I think, one of the most popular trades that we do in the trading room right now. Very, very powerful trades from a risk-reward perspective. Some of these are pretty impressive ROI-wise, 10 to 20% return in a month on a couple of these. But they're not the highest return potential trades by any stretch of the imagination that we do. But from a risk-reward perspective, might be one of the very best trades that we do. Again, if you're looking at that risk component and not just how much you can potentially make. We've done 3 of those, and all 3 of those are winners right now. A couple of those are still working, but they look really solid. The other strategy that we've added is a broken wing butterfly ladder, and we are having some good success with that. We've just started with this one. We've got the first leg in, and we will be putting another ladder onto that trade here this week. So just getting started with that one. Our ATM investing passive asset allocation model. Now, everything else that we've talked about here is either scalping or trading. Well, this is investing. This is investing. It's passive in nature, asymmetric trading method. We crushed the market in 2021. We beat the market in 2022 by even a higher percentage amount. And so far this year through January, we're up 3.32%, which is excellent. I mean, we're on track for almost 40% a year ROI, but the S&P just absolutely was on a tear, up 7+% in January. Again, I don't think that that's probably going to continue. And I will say this, that if it does, we will never keep up. We will never, ever keep up with 7% a month. Not designed to, because we're designed to focus more on the risk management side. So anyway, it's off to a really good start. We'll come back to this in December, and we'll see who's winning the overall battle here. But so far, so good on the ATM. If you do want to come join us and trade with us, check out our live trading room, talk with our traders, interact with us, watch us trade live on a daily basis. You can do so. Go to try0dteforfree.com. You can jump into our trading room, jump into our live Zoom feed, trade with us, trade right alongside with us, and ask members what they think of the program. You can do that for 7 days for free. We do have a double your money back guarantee if you jump in and you follow all of the training and the criteria that we place on our members in terms of rules and how we trade and what is acceptable and not acceptable from a risk standpoint. And you like it, so you sign up for your first month subscription, and you don't think it's the most amazing value-added trading room out there today, I'll give you double your money back. So no real risk to giving us a try. If you do want to try our asymmetric asset allocation investment model, you can go to tryastforfree.com. Again, that's more investing, passive in nature, just takes 5 minutes a day to do a couple little tweaks to our overall portfolio. If you want to come scalp with us on Tuesdays and Thursdays, we have a live scalping feed. You can just go to tryscalpingnow.com. Our goal again is to try to bring in $500 to $1,000 a day in potential profits. So thanks, guys. I appreciate all of you. I appreciate your comments. I appreciate your interactions with me on Twitter or here on the YouTube channel. We will see all of you about an hour and a half from now inside of the live trade room. So take care. Have a good week. We'll talk to you soon.